Joining me right now is Potomac Wealth Advisors President and Founder Mark Avallone. Also joining the conversation all morning long this morning is Fox Business' Dagan McDowell and Fox Business' Edward Lawrence. Great to see everybody this morning. Thank you so much for being here. Mark, let me kick it off with you. What do you attribute this market sell-off to? Yesterday, a sharp move lower on the NASDAQ, and that's continuing this morning.
Well, the daily moves are hard to exactly pick the reason for, but I think what you're seeing is a little of the frothiness come off. I think there was a lot of money coming out of Bitcoin yesterday, a lot of money coming out of Tesla, a lot of money coming out of tech. And I think those were the high flyers that just needed to pull back. This could be just a pause that refreshes. I think the broader market rally is intact, and I don't see a collapse in tech, more or less a repricing and a broadening out.
At the same time, interest rates have been moving up, and a lot of questions on Wall Street these days about what level of interest rates does represent a problem for stocks. With the yield on the 10-year now at 1.357%, would you recommend shifting some money out of equities and into treasuries?
Well, yeah, and that's another reason for the tech sell-off. And I should have mentioned that the sudden rise in treasuries, it's not just the move to 1.37 on the 10-year. We've had bull markets with 10 years much higher than that. The issue is how it's gone up 2.5%, 2.5 times its level from last year. So that was a huge and rapid increase. And what that does is it discounts the forward earnings of tech companies and makes them more vulnerable to a pullback. I think that what's going to happen with Powell's comments today, he's going to temper a lot of the fears of a rate hike. He is committed, and the Fed is committed to easy money, to lower for longer, lower rates for longer, Fed accommodation. They have a dual mandate to work with both optimal unemployment and to tame inflation. And he seems to be much more interested in achieving optimal unemployment, and we are far from that with the over 6% number we currently have.
Meanwhile, the capital markets are quite busy. Mergers and acquisitions in the financial services sector expected to continue. Yesterday, of course, M&T Bank and People's United announcing a $7.6 billion merger. Mark, do you think these bank mergers will be continuing this year?
Yes, and we've talked about that on this show. I spent a number of years at SunTrust, which is actually now Truist because of the BB&T merger. That was one of the big ones that set all this off. And I think we're going to see a huge wave of mergers. They were suppressed last year. Way too much uncertainty, way too much uncertainty with credit quality. So it was really tough to get the valuations, but there's a huge need for these banks to gain scale, to afford the technology to compete. There's massive online competition for deposits. There's a huge overhang of costs from the legacy branch structure. Banks are no different than a lot of other industries that are now faced with internet competition and technology advances that make them need to adapt. And the thousands and thousands of branches that we have in this country that are going to close in the next few years are going to be astounding. People have realized they don't need to go into branches to conduct business. This is one of the unintended effects of this COVID tragedy that we're going through. And what banks are going to do is use it as an opportunity to merge, consolidate, reduce branch numbers, reduce headcount, and then implement new and advanced technologies as a way to compete. And it doesn't matter if you're a community bank wanting to become a super community bank or a regional that is searching for an identity and needing more size to compete with a JP Morgan or a Bank of America. They're all going to be looking for partnerships.
And I'm glad you mentioned JPM, because when you look at the large, big money center banks like a JP Morgan, like a Bank of America, they are already at their deposit limit. They're not going to be acquiring anymore, but you're really looking for the deal making to be in the mid-cap sector, similar size as M&T, People's United, et cetera. And that's where you're looking for the deal flow, correct? This year, real quick, Mark, we got to jump.
Absolutely. Looking at the regional bank ETFs as a way to play the continuation of what we've seen so far.